Good day, and welcome to the Real Update News. I'm Michael Reed. Today, we're tracking a notable shift in the cryptocurrency market as Bitcoin moves below a key psychological level that investors around the world have been watching closely. The development has renewed discussions around market confidence, investor risk appetite, and broader financial conditions. While volatility has long been part of Bitcoin's story, movements around major price levels often carry added significance, shaping sentiment well beyond the crypto space itself. Bitcoin's price action marks a clear change in recent momentum. After holding above $70,000 for several weeks, the world's largest cryptocurrency slipped lower during global trading sessions. While price swings are common in digital assets, this move stands out due to the length of time Bitcoin remained above that threshold. Levels like this often become reference points, influencing expectations and behavior among both short-term traders and longer-term investors. Looking at the price chart, Bitcoin's decline unfolded gradually rather than through a sudden collapse. This type of movement typically reflects reduced buying pressure rather than widespread panic. Analysts often view steady declines as periods of repositioning, where investors reassess exposure based on risk and market conditions. Still, direction matters. When prices trend lower over multiple sessions, sentiment can shift, especially when widely monitored levels are breached. The $70,000 level has served as more than just a number. For many investors, it represents a psychological benchmark. For others, it functions as a technical indicator, signaling strength or weakness. When Bitcoin trades above this zone, confidence often improves. When it falls below, uncertainty tends to increase. These reactions don't always reflect fundamentals, but they can influence short-term decision-making across the market. Volatility has played a central role in the recent move. As Bitcoin slipped lower, leveraged trading positions began to unwind. These positions rely on borrowed capital and are highly sensitive to price fluctuations. When prices cross certain thresholds, automated liquidations are triggered. This forced selling can amplify downward pressure even when the initial decline is relatively controlled, contributing to sharper short-term movements. Liquidation data suggests many short-term traders were positioned for continued upside. When that expectation failed to materialize, forced exits added momentum to the downside. This activity does not necessarily reflect long-term investor conviction, but it can shape near-term price behavior. In leveraged markets, price action can become self-reinforcing as technical triggers activate and liquidity thins during periods of heightened volatility. Bitcoin's movement has also reflected broader trends across global financial markets. Investors have shown increased caution amid shifting interest rate expectations, economic uncertainty, and changing liquidity conditions. When traditional markets adopt a defensive posture, higher-risk assets often feel the effects first. Despite its unique characteristics, Bitcoin continues to behave like a risk-sensitive asset during periods of tightening financial conditions. This raises a recurring question for investors. Is Bitcoin a safe haven, or does it remain primarily a speculative asset? While some compare it to digital gold, recent price behavior suggests it remains closely tied to broader risk sentiment. During periods of market stress, capital has tended to flow toward cash and traditional defensive assets. This dynamic continues to challenge long-standing narratives within the cryptocurrency community. Despite the pullback, not all analysts are pessimistic. Some view the move as a healthy correction rather than a structural breakdown. They point to previous market cycles where similar retracements were followed by renewed accumulation. Data also suggests that long-term holders have been less active sellers, indicating that conviction among this group may remain relatively intact even as short-term traders adjust positions. Others, however, warn that losing key support levels can carry risks. If confidence does not return, Bitcoin could test lower price zones where stronger buying interest may eventually emerge. Market psychology plays a significant role during these phases, and extended weakness can reshape expectations. Even optimistic investors often become more cautious when uncertainty persists, slowing recovery momentum. Bitcoin's influence extends far beyond its own price. When Bitcoin moves, other cryptocurrencies often follow. This pattern has been evident in recent sessions, with altcoins and crypto-related equities experiencing increased volatility. Because Bitcoin remains the dominant asset in the space, its direction continues to set the tone for the broader digital asset ecosystem. Looking ahead, investors are monitoring several key factors: economic data releases, central bank policy signals, and overall market liquidity will remain in focus. Technical levels near recent lows are also being watched closely. Whether buyers step in or remain cautious could help determine whether Bitcoin stabilizes or continues searching for a firmer base. The coming days may prove critical. A sustained move back above key levels could help restore confidence. Continued weakness, however, may reinforce bearish narratives and delay recovery. For now, uncertainty remains the dominant theme as investors balance long-term belief in digital assets against near-term risk in an evolving financial landscape. As always, market conditions can change quickly, and volatility remains a defining feature of cryptocurrency markets. Staying informed is essential. We'll continue tracking developments and breaking down what they mean for investors. For the Real Update News, I'm Michael Reed. Thank you for watching, and we'll see you in the next update.